Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about EuroUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market, then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the chart. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside were created. Every time the market was around this zone, it got rejected to the upside. At the moment, the market is testing the exact same zone and has already started rejecting it to the upside. So from a monthly standpoint, more bullish price action could be expected away from this strong monthly demand and support area. Now let's keep all of that in mind and drop down on the weekly time frame. From a weekly perspective, we can notice a perfect inversion of trend from a weekly bearish market to a weekly bullish market. We went from the creation of weekly lower lows and lower highs to then having this double bottom created at this area. Now the market is shifting to the creation of higher highs and higher lows. So we had a perfect inversion of trend from a weekly standpoint, with this double bottom being the inversion pattern which triggered the shift. Also, let's keep in mind that the inversion came exactly at that previous historical monthly support and demand area that we have previously identified. So there's definitely the possibility that we saw some strong institutional buying inside of this zone. We will be speaking about institutional buying in just a few moments when we move to the commitment of traders analysis. For now, let's keep all of this in mind and drop down on the daily time frame. From a daily perspective, what we can notice is that we just got a massive impulse to the upside, which broke out away from the previous resistance that we had at this level. All of this was this level was the level from which all of these two previous rejections to the downside were created. Now the market broke above the zone. Now, what we know is that in the market, if we have a strong level of resistance from which multiple rejections to the downside have already been created and the market then manages to break above the zone, what we know is that that previous resistance at that point becomes support. And what we would expect is a retest of the previous resistance turn support and then a rejection to the upside. So in a situation like this, what we would naturally expect is for the market to retest this level, respect it as support, and reject it to the upside. Now, as we have an impulse and correction, if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have the 50% and 0.618 and 0.786 Fibonacci retracements all lining up exactly at this zone. Now this creates confluence of support at this level because we have multiple layers of support lining up in the same area of price, which create confluence of support, increasing the probabilities that we could see some institutional longing inside of this area, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. Now, if we move to the commitment of traders analysis and we look at the euro to see what institutions are doing inside of this zone, what do we see? Well, in the very short term, we actually see net positions getting decreased. We went from 65.5k to 51.8k net positions, with 7,000 shorts added with the last report and 6,000 longs getting closed. So it's no surprise that after the market rejected to the upside, immediately we're starting to see this rejection to the downside. However, it is also important to keep in mind that we don't have the data for this massive candle here. There's a good probability that we have seen more institutional buying as this candle obviously happened. and that we will only see it with the next report. So it's important to see if we did see longing with this huge candle, which is very, very probable. Now, if that will be the case and the market after the break goes for a retest and stays here for a few candles, there is a good probability that institutions will continue to add longs. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, where there is a possibility to see more institutional longing, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, and institutions would continue to add longs, at that point, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.